to the paperwork? What do you do?
Well, most of the time it's relatively simple. Every state has sort of the official paperwork that you need to file to create the LLC. These are going to be called your articles of organization or the articles. And they basically set forth the name of the company, who the members are going to be, the type of management style. And these are some of the things that we cover in the materials. But generally you could get everything pretty much filed in about an hour and a half to 2 hours. In fact, I just had someone call me the other day and say, I did it in an hour and a half. It was really easy. I went through all your stuff. It helped me tremendously, and I set it up, and it was very easy. So that's the good news, and that's a nice thing about this program is it takes you step by step through all that. But let me tell you, there are a tremendous amount of questions that you're going to need to ask before you file all that. And I think the real value of really educating yourself on these processes is going to come from that. And I'd love to talk later about some of the issues that can come up when you have other parties in your business and how you want to determine how monies will be split and other sorts of things. And we'll talk about that soon, I think. But generally, it's a pretty simple process. It won't take very long, and especially because we walk you through it, it becomes really, really simple. And you can be sure that you're doing it in the most effective manner and you're not making any mistakes. For example, there's certain clauses. Some states have what are called acknowledgement of personal liability clauses. And this is a disastrous type of thing. I just wrote an article on this the other day. There's a handful of states. Don't ask me why they have this clause in the Articles of Organization, but this clause actually allows you to check a box which acknowledges that you, the owner of the LLC, will be liable for any, and you'll be personally liable for any debts or judgments against the LLC. Now think about that for a moment. The whole reason you're setting up an LLC is because you don't want that. Well, for some reason, there's about 6 states that have one checkmark box that if you check it, you're in trouble. Now, let me tell you.
It's ridiculous.
It is ridiculous. But isn't it worth knowing that your attorney or the company that filed that for you did not do that? And what I tell people is if you've already set up an LLC, you need to get out your copy of your Articles of Organization. You need to review everything against what we have in here and be sure that that wasn't checked. Because the sad reality is that while you may be paying the attorney, and I'm not going to speak for every attorney, but for a lot of law firms and things, you may pay them $600 to file the paperwork for you, but the person who's filling it out is usually not going to be the attorney. It's going to be a law clerk, it could be a legal secretary, and it could be a host of other parties. So you really need to watch those sort of things. So mistakes in that initial process are very common. And so it is easy if you have the right instruction. If you don't, then you want to get the right instruction. And if you think you've had the right instruction, you may learn that your instruction wasn't as detailed or as thorough or as careful or thoughtful as you originally anticipated. In that event, get some good information and go back and double-check everything.
Now, how much paperwork is involved in maintaining it? Like you just talked about starting it, but what about maintaining it each year, and where do you find that paperwork?
Well, generally, the paperwork to maintain an LLC is also going to be very important. And for really most business entities, there is going to be some maintenance. I recommend first, we could talk about this at the state level. I recommend, that you are sure of all your state requirements. You would be amazed at how many companies are set up and that the owners don't realize that there is a state tax reporting form that you have to submit, even if you don't owe any state taxes. Every state may or may not have a state, some call it a state income tax, some call it a state franchise tax, but even the states that have a franchise tax, they'll have a cutoff. And at some point, you may or may not make enough money to invoke that tax. In other words, you don't owe the tax. Well, even those states that have that, you are responsible for submitting a form generally that will say there are no taxes due. We don't owe any state taxes. We may owe taxes to the federal IRS guys, but we don't owe taxes on the state level. For example, for many years, Texas just increased this amount, but for many years, Texas had generally what I'll call a tax that kicked in if you made $150,000 or more. And so a lot of the folks that I was dealing with, they had smaller businesses and that were doing pretty well, but they didn't kick into that $150,000 amount. Well, I've seen accountants that would not advise their clients and tell them that they needed to submit what's called a no franchise tax due form. Well, as a result, the client doesn't submit it. Guess what the state does? The state will revoke your business entity. Okay? It's very important to understand that if you don't comply with certain documents and paperwork, the state will revoke your entity. Now, you may find a great accountant that tells you everything that you need to know and keeps you up to date on all that, or you may not. I've seen many situations where they do not. So let me just tell you that that's pretty important. The other thing that's important, too, from the standpoint of paperwork will be some of your internal meetings, some of your documents, the tax returns. In general, the work and paperwork involved really isn't that great. But if you decide to use it off, tax advantages seem very beneficial to you, as you can imagine, and the liability protection is an issue. You need to play the game right, which means you need to keep up with and you need to be aware of what some of your requirements are. Again, we go back to the common situation, and that's why I wrote this material and created it, is because most people that go to an attorney to set it up, they get everything, they leave with a bunch of papers, and they're not really sure exactly what to do next. That invites disaster, because if you don't keep the proper records, you don't notify the state, then you're going to have your LLC or other business entity revoked. And that is a very disastrous situation because it's basically as if you're having nothing at all. And here's another disaster. If that happens to you and you've been, let's say, using an S corporation or an S subchapter S LLC, and now you have the IRS asking you questions, which would be the federal IRS, federal government. Well, in that event, if you're no longer viewed as an LLC taxed under subchapter S by the state, it's possible that the IRS may also retroactively tax you in the manner that you have been operating. So if, let's say, your LLC was revoked because you didn't file your state franchise tax reports, then the IRS may view you as no longer a subchapter S LLC. So, you know, those types of things are pretty important. I mean, it's debatable whether the IRS would do that, but as I said, those state forms are pretty important, and we go through all of that. We also go through, as I said, the records that are necessary so you can run the entity for maximum asset protection, and you can back up any tax decisions that you're trying to get, and you can back up all your tax decisions and tax choices that you're trying to justify.
So we've talked a little bit about, you were just mentioning taxes. So what are some of the traps that, if you don't have your business set up right, or if you haven't set up a business at all, what are some of the tax traps that you're looking at facing?
Well, instruction in this area is really important because, one mistake can cost you thousands of dollars. The first thing I think for most people is, as a sole proprietor, which is the individual that goes out and says, you know what, I'm going to start a business, I'm going to start an eBay business, I'm going to start any sort of online business or business with a tangible storefront, you have several risks and traps. I think the biggest tax trap that we haven't talked about yet is the fact that IRS auditors spend more time on sole proprietor tax returns than any other tax return. When you file your taxes as a sole proprietor, you're gonna file what's called 1040 Schedule C, and that's going to be active income from side business, and that's where you're going to list your deductions and all your different costs and your income. Those types of returns, 1040 Schedule C, is audited as much as 5 to 10 times more than LLC